And we are live on the Independent Investor channel. My name is Ryan, coming to you from the most powerful city in the entire world, New York City. I'm happy to be bringing this live stream to you. Very, very special. Been off for the last few weeks. It was for good reason. A few Christmas parties, one at an aquarium. I had dinner with the sharks. It was pretty cool. But this is the time where we want to assess how things went in 2024, making sure that the mentality that we set on a path and trajectory at the end of 2023 panned out. How did it pan out for you? Did you meet your goals? Did you exceed your goals? Did you overcome adversity? Did you incur any shortcomings during the year? This is the time to reflect back on that. I'm a reflective person. I would like to declare to the audience that my reflection in 2024 has been quite positive, where years past has seen me looking so forward to the next year. I'm very, very thankful for what has transpired in 2024. A lot of very, very positive things. And if I can convey to you, for those, first and foremost, the subscribers to the Independent Investor channel, welcome. Thank you for your loyal subscribership to the message. And for those new to the channel who are looking to separate me from the other 499 other financial channels out there, I am different. There's no doubt about it in my mind. To be able to convey a mental approach to not only stock market investing, but life in general, the more of a mental edge you can give yourself, the more independent control you give yourself over your investing discipline, as well as any of the decisions that you make. The time and place and the epiphany that one will come to when they realize the power of independent thought will be the day that they truly find out that they have a choice whether or not to go right or left, what stock to choose, and what message to interpret, how to spend your time, what makes sense to you in the investing realm, what are your goals set up for 2025, how are you going to learn from what has transpired in 2024 and make it better, add to it, leverage. A lot of the things that I'm going to share with you in the 2024 summary are a lot of the same old tried and true principles that I have been conveying on the channel, and conveying them with the sheer intent of getting through to people in understanding thematic investing and how to carry out that thematic investing, and then to condition your mind to be mentally tough going forward. I can tell you, my friends, we are at an interesting time here, staring down an S&P 500 that was up. I just checked it year to date, if you can believe this, 26.86% this year. Passive income is dead. It's going to be a stock picker's market. There was not one single person in 2023 forecasting that the markets would do this year. Is it going to repeat itself in 2025? Well, see, that's what makes me different. I'm not a market forecaster. I will give you my honest opinion a little bit later on in the show, but I do that to convey the absolute followership that I believe is just so rampant in stock market investing, in taking the convenient opinion that everything is just going to remain hunky-dory and that the stock market will inevitably go up over time because Tom Lee says that it will. Okay. Now, I love Tom Lee, but here's the convenient thing. Tom Lee has won the lottery by being deemed a stock forecaster. And if you pulled him aside in silence and said, you really know how to, forecast the stock market? He'd tell you, hell no, of course not. But it's a marketing thing. People trust me. They trust my insights. And albeit he has been right over the last couple of years with some of his forecasting and some of his market pulse and sharing that pulse, it doesn't mean anything in the grand picture of things. Further, you should not be listening to the forecastings of individuals and basing your financial portfolio, your financial decisions based on those forecastings. It's entertainment at best, just so you can know to take my information with a grain of salt. Honestly, it helps educate you. Now, I'm going to give you my best thumb on the pulse opinion. This is YouTube, my friends. Okay. We're not sitting in a tight conference office, and I'm not an oracle. Okay. I don't believe that that's possible, but what we can do, we can challenge the status quo. We can say, okay, knowing what it was that seemingly everybody in 2023 was not talking about them as we set up for a 2024, what are those elements of 2025 that are going to define the market as we close down 2024 and enter into a new year? Okay. There will be some things that stay true. There will be some things that I'm going to bring up tonight that nobody's talking about. And I just want to bring your attention to it. Why? Because I owe you value, and I try to dig as deep as I can to find said value. Try to kick over as many stones as I possibly can to try to really help you, to try to define the independent path. Okay. To try to make sure that each individual out there has an opportunity to understand that followership, although very easy to do, is absolutely planned poison in financial and especially the investing game. So, with that, guys, I do want to bring back an old Ironside mainstay in devotion of the Hindu cows, no pun intended. I don't have the cow video tonight. It is the sheep followership video, which pretty much sums up YouTube, pretty much sums up the drone chasers, the Bitcoin chasers, as well as those people who think that the S&P 500 is going to go up another 30% in 2025. Guys, be back with you in just a moment. Why do we do that? It's not necessarily to pick fun. I've said this many times. I don't spend a lot of my time paying attention to others. All right. But I just think, if we go back into 2022, if you recall, I was investing very heavily in the market in 2022. Okay. The school of thought back then, I'm going to remind you, was to exercise the demons and entertain the idea of going to an all bond portfolio. Remember? An all bond portfolio. Okay. Stocks were in the shitter. No good. We can't invest in stock. Passive investing is dead. Not going to work. We need to look at the prospects of bond investing because we need to guarantee ourselves that 3 to 4%, at least it's guaranteed, and we can safeguard our portfolio from a mythical 20% downturn in the stock market. Remember, this is 2022. Coming into 2023, 2023 ripped your face off with a 20% rip in the S&P 500. Okay. The end of 2023 had schools of thought that nary would have suggested a nearly 27% return for the S&P 500. Mind you, this is the ETF that, if you invest in SPY at day one, January 1, and you own it now, you have made 27%. You have matched the market, my friends. All for doing nothing. Now, if there was beads of sweat drenching from your brow and you ended up looking at the very dollars in that SPY holding from January 1 until now, and it stressed you out to the point where you couldn't sleep, okay, I apologize. But for the most part, I'm going to tell you that from a baseline position, it's about as easy as an investing philosophy as you can possibly get. Low cost, diversified. You own the very best representation of the US large cap stock market there. And nary I say more. You want to house that into a Roth IRA, you're double kicking ass with the shelter over the tax implication. Okay? It's a kick-ass way of investing. All right. I've grown my wealth using this and many other strategies, that of which I'll share with you. The point of it is, we are here now in 2024. And how many people have already looked at 2025 and said, this is exactly what 2025 is going to do? Do you believe them? Based on the track record that I just outlined, they didn't know in 2022. They didn't know in 2023. I can tell you they didn't know in 2021. They didn't know the entire decade of 2010 to 20. They didn't know from 2000 to 10 that we would be sitting right here at over 6,000 in the S&P 500 in 2024. Okay? They didn't know. What's the point? For new investors, my friend, if you can just come to terms with this, put it in your mouth, chew it up for a bit, digest it a little bit, put it in the back of your mind, put it in the back your back pocket. Okay. All things considered, it is the very, very best cornerstone that I can provide to you guys as a pillar in your portfolio to seek out diversified, low cost ETF investing, passive investing, funded up over time. You'll kick some ass doing it. Now, what does that mean for 2025? And does that mean, Ryan, it's the first time coming to your program? I know you've been trudging through this YouTube minutia for the last 8 years saying the same message. Am I to understand you right, Ryan? Is now the time to dump my entire wad into the S&P 500? Okay. Hold that thought, because I'm going to say some things about 2025 that are probably going to irritate some people. So if you're pissed off about Oracle, you might want to wait on the dislike and unsubscribe, Matt, because what I'm about to say is concerning going into 2025. What do I think about the impacts to the markets? Well, my friends, these are the things that we need to be asking questions about. Look, you want to stick your head in the sand and just come back to me and say, Ryan, the market was up 27% this year. It's going to be up 27% next year. Fair enough. It took zero thought. It took zero contrarian approach. Okay. Right. If the masses are saying this over here, what is the harm of going over here in no man's land where there's no food, no water? It's famine over here. There's nobody here. Okay. Everybody's over here. They're all ready to go down for the investing retreat because they're all going to end up making the stock market show them the path to their retirement into the rainbow and finding that pot of gold, because they're going to get that inevitable predictable returns in the S&P 500 over 25%. I'm going to tell you that those returns are atypical. That's my opinion, but they are. Okay. If the stock market, the S&P 500, Matt's in the gallery here, Matt Money, welcome. I think if me and Matt talked and we said, Matt, finally we've got this market to where we're chugging out 25% a clip, I think we could both agree that we would just take that and stop stock picking altogether. Okay. He would say, well, I don't know, Ryan, I got Palantir in my portfolio, man. Hold on a second. I got Rocket Labs in the portfolio. They're doing quite well. Look, my point is 25% a year can get you there, but it is atypical, and do not expect that those returns are going to be forthcoming for the following many, many years. Okay. I think the last couple of years has been phenomenal. I felt like as difficult as it was to invest into the teeth of extremely negative markets during a time when I was the one over here and everybody else was over here. the bonds market over here, and the market's terrible, and the market's going down every day, and Bitcoin's going to hell. Bitcoin was at 17,000 bucks. Yeah, not too long ago. Everybody over here. And there was Ryan putting money into the market very deliberately, very strong. And those dollars have incrementally improved over time. The last couple of years have been very, very good to the I2. We may get to a portfolio review tonight. We may not, in deliberation over some of the themes that I have put to work in the market. Okay. So I hold on just a sec, guys. We got a little technical. Hold on. Okay. Let's get back on it again. Stand by a moment. Oh, that was strange. I've never had that. A complete whiteout. I think I'm still on audio here for a moment. All right. Stand by, guys. Let me try to fix the debacle here. Let me see if we can go. Well, we're on audio for a bit. Sorry about that, guys. We dropped a video for a second. I don't know if StreamYard just decided to drop my subscription for the year's end. Maybe it's a sign of the times for 2025 that we're not going to get to enjoy a nice live stream. That could be. That could very well be. But anyway, you guys will have to kind of like pretend that this is a podcast. All right. So close your eyes and I will take you to a place that you've never been before. If you've never caught my podcast, this will be a lot of what it's like. So hopefully the video feed comes back. I'll continually try a little bit and see if we can't win this video back. But 2024 for me, just to go through some of the highlights for you guys, was monumental from day one. And I want to convey up front the biggest milestone of 2024 in my mind was the uplisting of Aduro Clean Technologies to the NASDAQ. Okay. That was huge. But there was a lot that came with that uplisting, in my opinion, that added a lot of value to the underlying portfolio, my base position in the company. And what I found in 2024 was a renewed discovery in the network of people that I work with on the project. And for that, I am forever grateful. It was amazing to get to know Yazan, Mariusz, Penny, the principals that are most closely related with the project. It was the year in 2024 when I was able to actually and to be able to actually see with my own eyes what it was that I was investing in on a much smaller scale. I was able to build the position significantly in 2024 to the tune of 50,000 shares. That's actually what we settled out in as we close out this this year. So I'm very, very proud of that. That's a post-split basis of 50,000 shares. So you guys can do the quick math on that at, $5.60. To be quite honest with you, I'm satisfied in 2024 what has happened with Aduro, and they could do no more in 2024, and I'd be happy with that. I'm totally okay with that. But looking into 2025, I think that's going to be the bridging year to establishing the next generation modular reactor. I think they are going to co-build the final commercial unit, the modular unit, with some of their smaller clients and maybe even some of their bigger clients. in 2025, and then going into 2026, I have earmarked for the potential early expectation for realizing some revenue off of the commercial units that the company has. And so that's going to be very, very exciting. It is absolutely emboldened the bottom line. I feel like we're invested in a very, very good cause. And it was very, very proud in 2024 of me discovering really my conviction with the company and also sharing it with others. So very, very exciting stuff there with Aduro Clean Technologies in 2024. As a lot of you guys know, in 2024, my Fidelity account, um, it was a big, big transition for me from Bank of America, um, which I had been with for 20 years. Moved away from Bank of America, established basically the same accounts with Fidelity, condensed a few accounts, and got Fidelity stood up in 2024. And the amount of interest that I have been able to make in 2024 has been absolutely a game changer. We have went well over $1,000 in just one account for the higher interest that Fidelity yields off of the accounts. And so I couldn't be happier with that. I like the aesthetics of Fidelity. So I feel like that's a real positive move that we made in 2024 under the investing envelope. And I just want to convey to you guys, the importance of selecting a broker that you're happy with, something that you can keep most of the investments with, something that you feel comfortable using the platform, and something that has the respect and integrity of a Fidelity, where you can feel comfortable housing your money with. 2024 saw some of the discount brokers really take off, like Robinhood and some others. And I'm not really sure of the allure of that. I would caution you to look at, those brokers that are reputable in the space, and look at, who's going to have your best interest in mind. I know a lot of people like Robinhood, but I think historically, just as of in the last 5 years, that they're pledging to be on the side of the investor, but when things really get tough, they will choose to pull the plug every single time. And that's just not something that, or a business that I want to do business with. So saw me landed with Fidelity, and I thought that was to be able to do that. And I'm happy that we did. In 2024, the cash position grew. It grew incrementally within the portfolio. It grew sizably, with the idea that we're saving the cash in a market that has done nothing but grow very, very quickly. Okay, now we'll talk about some of the investments that we have from this year, but I felt it prudent this year to continue to aggressively save that idle cash for that eventual opportunity that I think may be presented as early as 2025, and I will be ready to do so when that opportunity presents itself. So stand by on that, but I felt that was a positive attribute in 2024, saving the cash position and really trying to get ahead there on that opportunity. The dollar cost averaging held steady in 2024 for me. It was the in 2024. Let me just break down some statistics for you guys. 25% of my total take home pay goes into my 401k like account. Okay, 25%. Then you've got the Roth fundings times two. And then you've got the strategic buying that I do throughout the year. So you can be rest assured that a large portion of my take home pay is actually being funneled into the multiple accounts that I share with you guys on a weekly basis, understanding where my loyalty lies. And I think for people that are out there listening, where is investing as far as a priority for you. I think I've conveyed very strongly my conviction in investing and what it means for me and where it is on the priority list. I think for a lot of people out there, they really need to question, you know, how much of a priority investing is. And that can be one of those strategic goals that you align for 2025. And, ask yourself when you're at the end of 2025, what is the contribution schedule going to look like for you? And, you want to make sure that you're looking back and say, look, I did everything I could possibly in 2025 to make it a go. And that was a real positive for us. I've already mentioned the S&P, 26.86% passive investing's crushed. For you guys that got a hold of my ETF portfolio, I still have that. It's chugging right along. What a great example of passive investing. What a great way to convey access to the markets in a little more of a creative manner, buying all 11 sectors of the S&P 500. All of them are up sizably, of course, over the last 3-4 years. I've had the portfolio in motion, but it's passive investing at its best. I don't even dollar cost average that account. I just watch it grow over time, and it's a great affirmation as to the power of passive investing. Even though the markets have been conducive, the relative risk that we take on by owning the ETFs that way is quite significant. And the last thing in the investing category, I will say this: we accumulated no debt. We are debt free. For those of you guys out there that are looking to take a tidbit from the independent investor channel, I would say that one of the most important elements of that is the aspect of being debt free. It's a choice. To control your credit is a choice. The ability to keep yourself out of debt is a choice. And I have just chosen that keeping myself under wraps with regard to the credit card discipline and application is one of those high priorities that I cannot stress enough. It is very, very important for people to adhere to in their financial discipline. So very, very important to adhere to that and try to keep that debt under control, or at best eliminated altogether. For me in 2024, the professional aspect was second to none. Coming into the new year, I'm going to be 6 months away from a 20-year career. I do plan on doing 10 more. The difference in the 20-year and the 19-year is that at 20, I'm eligible for the pension, and that is huge. That absolutely emboldens the bottom line. It definitely sets ourselves up for just another bucket of potential income when we get closer to retirement, which for me is around 59 years of age. So my target date is further emboldened by allowing that 20-year mark to happen below my 50 years old mark, and given me that continued rigor into my latter part of my career to continue to do that. Along the professional aspect, I would say that the accomplishments in 2024, not to get too crazy with this, but 2024 for me was just an absolutely fantastic year, professionally, personally, financially. It was absolutely fantastic. And I would wish this upon anybody. For those folks out there that are trying to understand what the attributes are that I put in play to make this thing go, that is just it right there. It is the very aspect of, you know, going to work every single day, doing a job that I absolutely enjoy. I love my job. I enjoy getting up and going. I enjoy the day-to-day work, and it seems like my day flies by, man. When it's closing time, it I just can't believe it. I don't take a lot of vacation. I'm certainly immersed in the work, and 2024 really was extremely fulfilling. I looked at 2025 as being a continued enjoyment of that professional aspiration here in New York City. And so, very excited by the prospects by that. Along the lines of health and well-being, I don't know if I could come out with a New Year's resolution and actually say that I should work out less, because in 2024 I was in the gym, got up at 4:35 every single morning, and was in the gym on an average of about 6 days per week. So every day during the week, there was, a few nuances where days would come where I had to be at work early or something like that, to where I'd miss. But I would say that the majority of the days in 2024 found me starting my day in the gym by 5 o'clock, and spending almost 2 hours solid in the gym every single day. So I cannot tell you enough, my friends. For me, I kind of have an addictive personality, right? So, my devotion to stock market investing and financial wealth and all of that stuff, aspirations of, maybe something a little bit grander in this life, just speaks to my dedication and devotion to that craft. I feel the same way about health and well-being, and I think there would have been a time in my life when you could have asked me, "Hey, Ryan, do you ever foresee yourself going in, early in the morning, 5 o'clock in the morning, and going to the gym?" I would have said, You're crazy. Nobody does that. That's nuts." But I think the payoff to doing that is far greater than, the mental block that you get when you just talk about, oh man, getting up so early, and, you try it a couple times and it's painful, you know but what you come to find out is that once you get moving and going, you get it knocked out the first part of your day, and it sets yourself up to have significantly more energy actually throughout the day. And it's one of those things that I'm very, very proud of in 2024. It's very interesting to me, that I was able to stick with it. I've done that now for about 3 or 4 years, and that will absolutely continue in 2025. Keeps me calm at work, keeps me healthy, keeps me happy, and we will continue along that. So I thought I would share that as far as a 2024 summary. Along the social media aspect, I already mentioned the network. um, I did remain undefeated in my Twitter wars in 2024. I did invite a lot of naysayers on to the Independent Investor channel. I'm glad I don't have a guest tonight, because this is the first time that the StreamYard has actually shut down on me and not allowed you to see my mug and my green screen studio. So again, I do kind of apologize for that. That's too bad. But nonetheless, you'll still get the message. And I think a lot of people listen to this as a podcast anyway. So, my live stream is just another aspect and element of delivering the product. But the reason I say that is because, social media is interesting. It's fraught with people who I wish had more of a temperance for um, debate, and more of a temperance to actually be critical and positive on different stock opportunities. The biggest one from this year was Aduro Clean Technologies versus Pure Cycle. And it's amazing how contentious that dialogue got. And I didn't really understand why. And I went on and I invited the guy to the live stream, the gentleman that I was debating, and he blocked me. And so I thought that continued to speak toward my insistence that people are comfortable up to a point, spreading a narrative that is comfortable to them and no more. They are not willing to entertain and engage in even combative dialogue that may end up rendering an opinion that is better than at the onset of the conversation. And I never really understood why people can't, aspire to that level of challenging discussion to get to a better place. Um, I want Pure Cycle to succeed. My criticism of the business all too often when I bring those criticisms up in a public forum, they get matched with, deterrence and, well, Aduro's not going to do this and this and this, and that's somehow supposed to speak to the deficiencies on the side of, my stock, the stock that I'm loyal to. You know, I think I'm just about as prepared as anybody as being a bull on Aduro Clean Technology to actually come up with a bear case on Aduro Clean Technologies. Why? Because I think it's responsible to do so. You know, I think people who fail to acknowledge the other side of the coin are really cutting themselves short in understanding what are the potential shortcomings of a stock. What are the negative aspects? And I can tell you what those are, in my opinion, and I could tell them what they should be saying, but they're not saying that. All they're saying is, look, it's not for real, or it's a scam, or the big companies are just going to rip them off and then they're not going to be left with anything. And it's almost like an escape from thinking. And I think it's really unfortunate. But I will say that, my Twitter rants, my only two tweets today went to Elon Musk himself, challenging the idea that he said that plastic recycling is, I don't know, pointless, I guess. Well, it does have a point, and we need to figure it out because the plastic problem is overwhelming us. And dare I suggest that there's a few companies working on some groundbreaking technology, Aduro being, in my opinion, at the forefront of that feel like they've got the solution to this problem. Their biggest problem right now is notoriety in the space and an inability to get the word out and trade any more than 150,000 shares per day. That's just not going to cut it. So notoriety, in my opinion, is the biggest challenge for Aduro going into 2025. All right. So that's 2024 in a nutshell. I'm sure I could rattle off a ton of other things. The reason I share this is because I want to kind of perk your curiosity in reviewing what it is that you did, how you performed, what mistakes you made, what you could potentially do better, and establish some new goals for 2025. But before we do that, I do want to give you some insight on what I have been talking about on the Independent Investor channel for going on better part of a year. And I think in 2025, I think it may potentially run the biggest threat to the stock market, as a negative catalyst. Okay. It's not Bitcoin. It is not the national debt. As crazy as those two things are, for example, if China comes out and says, look, Bitcoin is a scam, I think that would be actually pretty detrimental for the stock market as a whole. Further, I think if we figured out that our national debt and this amount of interest that we're paying to service that debt actually becomes real to people, and those two actually come together in a bad way, I don't think the stock market is going to react to that. However, I think there is a greater threat than either of those two things. And I believe that halfway through 2025, we are going to have a real estate market, the likes of which we have never seen before. Let me say again, and you guys can hold on to your pants. I realize that a lot of you guys out there don't want to hear this if you own homes. If you own homes, no problem. You will probably continue to own that home for the next 10, 20, 30, 40 years plus, and you will be just fine. Because the very nature of who created this real estate disaster are not single family homeowners out there that are buying a home to put a roof over their head and keep the rain out and keep themselves warm in the winter. No. These are the big institutions that have come in and bought huge swaths of real estate in the United States of America, and in many cases paid way too much for the property on the onset. Now, the goal was to take over single family housing with the idea that they in no way had any intention whatsoever of inhabiting these investments outside of just taking these properties and renting them out to people. Okay. So imagine the huge swaths of master developments out there in suburbia, USA. Okay. The places that people want to be: suburbia, Savannah, Georgia, the Sun Belt states, Florida, Texas, Arizona, the Carolinas, suburbs here in New York, New Jersey, etc. Um, Suburbia around most of our big cities, Nashville. The list can go on and on and on, where every single area in this country was combed over and identified as a potential target for institutional buyers to come in and buy up. What has actually happened is that these master developments owned by all of these tenants now are aging and accelerating because there is no pride of ownership. And the poor homeowners that live in these communities, who paid $485,000 for a house that wasn't worth it at that time, are now realizing that the tenants there don't care at all about the condition of the property. They're there renting, and they don't need to. All right. And some of these neighborhoods that are 5 years young look like they're actually 15 years old. And that's just one aspect of the institutional investor problem that has been created over the last couple of years. Right now in 2024, those institutional investors are actually pulling chalks on the real estate market, and they're moving out. They are not buying anymore. Okay. They're actually pulling their investments out and liquidating inventory. Now, let me explain a phenomenon to you guys. What would you guys say in the last, let's say, 4 years post COVID, the pulse of the real estate market has been? It's been red hot, right? To the extent that sometimes as euphoric. Would you agree with that? All right. You've all talked to friends. Yeah, we were bidding against 20 other people and we had to put in a bid of 50,000 off and we won the house, right? How many friends did you talk to that engaged in that dialogue of competition with housing? Now, we have died out from that activity. Okay. It's not that competitive anymore. But that type of euphoric approach to the market over the last 4 years has created an interesting dynamic that has been different than the 2009 2010 downturn with the mortgage backed security crisis, in that we are in an inflation problem now. And although the Fed is lowering interest rates, they do not have the artillery to lower interest rates with the sheer intent of combating a real estate problem. Okay, they can't do that. In other words, Jerome Powell's not going to come in and say, we need to slow our roll with cutting interest rates, but we have to cut at an accelerated rate uh, because of the real estate market. Okay. In other words, the data does not support cutting rates, but we're going to have to do it because we're losing our real estate at an accelerated pace. Furthermore, you have to take that euphoric idea over the last 4 years and think about the potential for another side of the coin that may exist here and may, in fact, be looming, and sentiment may be shifting insofar as homeowners who have been sitting on equity and who have bought those high priced homes actually feel like their homes are worth more than what they actually are now. Statistics show. Okay. Further, Once homeowners actually realize that every month that goes by, that equity is decaying at a rapid rate, buyers have pulled out of the new home market. Okay. And that was indicative on the last call from DR Horton. If you actually listen to that last conference call from DR Horton, the results there were alarming and staggering as to the problem that has just started at the tail end of 2024. Now, why do I mention this to my YouTube audience? It's because nobody else is talking about it. Nobody. Everybody's talking about Bitcoin over 100,000. Everybody is talking about the Christmas rally. Everybody is talking about the new president being inaugurated early next year. Everybody is talking about a continued bull market into 2025. Now, if I'm wrong on this, no problem. Okay. Remember what I said at the top of the live stream about standing on an island with your opinion? And yes, let's hope for good times in the stock market. But it's irresponsible to suggest somehow that we can't question the current strength of what could potentially affect the stock market. And if you think, well, that's the real estate market, the stock market won't be affected by that, you are crazy. You are crazy because the way analysts are talking right now about the stock market, they just can't in their brains envision any type of negative catalyst that could be introduced to throw shockwaves into the stock market. My friends, valuations are high right now in the stock market. Inflation is still sticky. Interest rates are still historically high. Sentiment is shifting, whether or not you like it or not. Okay. Again, the poll that I was talking about that asked homeowners what they thought the value of their home was, 64% of them actually picked a number that was over what the actual value was. All right. Sentiment will continue to shift, and sentiment, just like the euphoric buy up, has a slippery slope effect. Once it starts to degrade, will accelerate to the downside and rush toward the bottom just as quickly as we rushed toward the top. And that happens both in the seller psyche and the buyer psyche when it comes to potential sellers and buyers in the real estate market. And I can't tell you enough, my friends, how I have been concerned over the last multiple years about what has gone on in this country, where the affordability rate of real estate has moved so far the other direction. And the affordability of the housing market, the 20% down, most people do not have $100,000 down to put on a house. They don't. Further, household incomes have increased, what, 4% year over year? And real estate prices have accelerated beyond that. The average household, the average payment on a new house has increased 100% over that same time period. So when you're talking about where is all of this money coming from, my friends, it is irresponsible to say that everybody can afford a $500,000 house. That's just not true. The household debt in this country is very, very real. The household incomes and the spending discipline or the lack thereof is very, very real. So to expect that the real estate market doesn't have the biggest potential in 2025 to be a negative catalyst on the market is quite frankly sheltering yourself from the conversation. And I'm concerned. I really am. I'm concerned from the perspective of a financial investor. I do not own real estate currently. I'm looking at it as a perfect storm, and I'm just waiting for the day that the left hand starts speaking to the right. In other words, the undercurrent of a degrading real estate market actually starts to permeate into what has been an absolutely perfect stock market. Now, you could come back to me and say, Ryan, I completely disagree with you. The stock market's going up in 2025. There's a great chance of you being right. Don't get me wrong. What my job here on the Independent Investor channel is not to tell you indefinitely and emphatically that the real estate market is going to hell in 2025. My friends, there are people out there that are doing that right now. And I don't know how much merit is behind that. What I can say is that we, for way too long, have been paying way too much for homes that builders have built with the intention of flipping to would-be investors by manufacturing demand over those homes in popular suburban areas. And buyers of these homes are going to wake up one of these days, they're going to look in their backyard and they're going to say, wow, this $485,000 house that I have, what is it really worth? What is it really worth? And I think people would be hard pressed to suggest that some of those values just do not equate with the perceived value, and especially the value that was paid for just a couple of years ago in the real estate market. So that's one of the things I will say that the pros, and I will continue to report out on this in 2025. The pros for me, the question is $1 million in play for me. It could be. The portfolio is holding true. I don't know if I can do a portfolio review with this visual picture all screwed up. Let me see if I can bring these up. Yeah, it's showing up on the screen, at least for the portfolio. And I apologize. I see some of the comments that some of the folks can't see me tonight. Yeah, my whole screen went white and then just went to black. So I don't know what happened. There's a technical glitch going on somehow. That's never happened, but that's all right. The show must go on, and we'll continue to make that happen. But is the $1 million mark in play? We will see in 2025. It really is contingent upon the strength of the bridging year in Aduro Clean Technologies. I would just wish that the stock would stay at $6 all through the year. I don't need it to go up. I'd rather have a little bit more promise at top end revenue. I want to get this company at 10 million revenue. We're a ways away from that. We're not even close to $1 million of revenue. So what does that say about my prospects in 2025? Are they going to make revenue? No, they're not. So why do I want the stock price to run away from itself, end up at $20? Just so I'm forced to sell the stock, take profit at levels that I think are premature levels to take profit on in relation to where I think the company could go longer term. So I'd rather see this, controlled rise in the stock price or just maintaining of the current stock levels in the company. But we'll just have to see what 2025 has in store. I do believe they'll embolden their collaboration portfolio. I do think in their shareholder meeting in January, that they usually offer every single year, I think they'll talk about bringing on a couple of partnerships. At least that's what I'm hoping for, to build out their collaboration portfolio through their customer engagement program. Those are some of the pieces of language that I want to see, but continued dollar cost average to the accounts, that will not change. And then I will become retirement eligible in July of 2025. So that's kind of exciting. But let's rip through the portfolio here. 73,000 just over in the joint account. Roth 1, that's 143,678. Roth 2, this is mine, 157,639. A lot of cash in there. Big position in Aduro Clean Technologies. Here's the ETF portfolio, just shy of 40,000. So approaching that $50,000 threshold. Since I started this account, this has just been a buy and hold kind of a fun exercise, and it's turning into something special. I like it. It's a fun way of investing. But here's the dividend growth portfolio. Top 10 holdings from top to bottom is Visa, Bristol Myers, Lockheed Martin, JP Morgan, Johnson & Johnson, Home Depot, Caterpillar, Procter & Gamble, Canadian Mutual, and Pepsi. So those are the top 10 in the dividend portfolio, with just over 65,000 there. TSP, this is Old Ironside. This is a passive account. This is where the 25% goes to. The allocation and breakdown is here on the screen for anybody interested. 141,581 there. The joint account, this is a business account for the Independent Investor Channel. Cornerstone Capital Solutions, LLC, 45,916. This fluctuates up and down with Aduro. My oldest Aduro shares are in here, cost basis in the low 70 cents. So we're far in advance of those levels, and I have no intention of selling at all. Here's the savings that I was telling you guys about. Again, building this up, 49,311 there. Vanguard's 401k, this is my wife's with the match. Just went over the $10,000 mark here lately, as of late. So that's kind of a cool threshold to meet. And then the total portfolio value, this will be the last time that I do the portfolio review in 2024, 782. So firmly above the $750,000 mark, which is great. I'm satisfied. It'd be nice to get to that seven figures. Not holding my breath. At the end of the day, this really doesn't affect my day-to-day operations. I don't sit here and manifest over this. But I do convey these numbers to show what is possible in the investing game. I can tell you this is a hell of a lot less about physical application and a lot more about mental application. That's for sure. And I absolutely want you guys to, to realize that it's a lot more mental than it is physical. It comes down to answering a very, very simple question for yourself. Is this something that I want to do? And what is it that I need to do it? That is really what it comes down to. And those are the questions that I have grappled with my entire life. And these are the renderings on the Independent Investor channel that have shown an attempt by me to answer that for myself, and to challenge you guys at the prospects of answering those questions for you guys. Michael, I saw you pop in there, and thanks for coming in. I really appreciate it. I know the picture whacked out on me tonight, so I do apologize. It's a little more fun, I think, when you've got a visual of who's actually talking to you. But nonetheless, Pfizer announced they raised the dividend. How you feel about Pfizer? I bought more just as of late. It was my latest stock purchase, actually, that pushed it right up into the top 20 in my dividend portfolio. So if that tells you anything about my conviction, it fell way too far. And, sometimes that happens with value. Those good value stocks, they get whacked. I was swooping in right there at the low 20s market. It might have been closer to 25, Michael, to be honest with you, but I was happy with the entry in Pfizer and went ahead and took it. So yeah, Pfizer's a good one. I like it. I took it. Really, really good stuff. All right. To some of these other questions here. Hello, Ryan. Do you believe Aduro long-term hold 5+ years? I don't think it'll take 5 years. But yeah, I mean, that's going to be the ultimate question, right? I really think 2026 is going to be a pivotal year. I think when we're talking about a company that's making 10 million on the top end, what's to keep them from making 100 million? Their modular approach is just X number of reactors per X number of projects per X number of clients. It's not rocket science what they're trying to do. In other words, Aduro goes in, says, how many reactors do you need? How many tons per annum are you looking to produce? And here is the reactor size that we need, or the number of reactors that we need. It's really just that simple. The cost gets shared by the person who is proposing the project, and Aduro takes a cut on the licensing schema, and it's just wonderful. I would really like to think that it's going to be under 5 years, that's for sure, as I've got 2026 earmarked for the first of interest, and we'll know in 2025 whether or not they're tracking toward that end based on the number of potential partnerships that they can bring in under the fold through the collaboration. If people are entering the collaboration phase and they're opting for partnership, then that's a good sign, right? And keep in mind as well, the stock can take off at any time. They don't need revenue for the stock to go up. Okay. I'm just saying it could be one of those stocks to where the stock market says, I'm sorry, Aduro Clean Technology, you're going to have to grow into your valuation. You're going to have to prove it before the stock goes up. That could very well be a reality as well. So am I prepared to hold the stock long term? Absolutely. I think we're sitting on the opportunity of a lifetime. That's just my 2 cents. If they truly have the greatest technology, which I believe that they do, it's their ball to fumble. In other words, there's been enough interest that I have seen, okay, that it leads me to believe that the multi-billion-dollar players in the industry are showing enough interest in the prospects of Aduro that leads me to believe that at $160 million, this company is so far undervalued, it's not even funny. And I think it's undervalued because nobody knows about it. That's what I think. Elon tweeted today, which makes me think that, and Elon speaks for everybody, right? That, the plastic recycling is pointless. It is economically pointless, to his point. Aduro solves that. So, to answer your question, I'd say be patient. I don't expect a whole lot in 2025. I like the place where the stock is now. I still think you're getting a bargain from a pre-stock split basis. What are we sitting at now, guys? I mean, $1.60, $1.70. What's the difference? I was buying at 70 cents 3 years ago. It's went up $1 since then. That's peanuts. It doesn't, so for the people who are entering the stock right now, you haven't lost a whole lot. You're getting the same opportunity now that I felt like was groundbreaking 3 years ago, just to put it into context for you. All right. David's in the house, and Florida insurance companies are pulling out. I didn't mention this. They see the trends in natural disasters. Their actuaries are smart. Look for failing real estate prices in Florida within a few years. I totally agree that that's also part of the spiral downtrend, right? It's one of many elements to the housing crisis, the looming housing crisis that I think is pending. And I'm not sure if we're a couple years removed of it, David. I hope you're right. I hope we never see it. I don't want to see people hurt or perceived. I think things need to come out of the stratosphere. I do think that. But I'm not really sure. Here's Lieutenant Lawson. Fantastic. Are we teaching options on this channel? Not tonight. We're not teaching options tonight on a live stream. But appreciate you making your way in and asking the questions. If you have questions on options, you can hit me up in private. That's for sure. Just send me a DM. But again, guys, I do apologize for the drop in visual feed. I'm not sure what happened there. I hope this is actually, we salvaged the live stream tonight, but nonetheless, pretty cool. I'm just scavenging through. I've got Kathy here. Merry Christmas to you. Thanks for coming on. Very good. Rocket count for liftoff. Yeah, man. That's we'll see what happens, man. We'll see what happens. Nice to hear, David. Great to see you. Wait, Ryan isn't the Oracle. Disliked, unsubbed. Thanks, Matt. Appreciate that. Merry Christmas to you too. Very good. I just got into it with a YouTuber who says don't try to time the market, but says hold your winners and use stop losses on your losers. He pointed to supposedly being up 50% in the last 12 months. Yeah, it was Cameron. I know exactly. It's common sense investing. I don't mind. He was one of the guys that blocked me. Not really sure. I actually think the guy, if he's picking winners out of a bucket of microcap stops, it's super hard to do that. So obviously he's got some smarts, and there's a lot of people out there with smarts enough to pick winners. I'm just not sure if, okay, so somebody comes to his channel, picks up that message, is it expected that 100 or 500 or 1,000 people, or let's just say what percentage of people are expected to come in and tune into that message and actually deploy that strategy? The success rate goes down to almost zero, you know, because you get to be reliant upon, and the game is, as a YouTuber, to come on and, you know, make people think that you have the answers, and you don't. I don't give a shit that you're up 50%. I already commented in his thread and I said I'm up 307% in Aduro Clean Technologies just year to date, you know? And no, man, you can't time the markets at all. Um, it's impossible to do so. Again, it becomes a lot more about ego when you're talking to people like that, and guys like me come on and tell them, look, I mean, I feel like you're wrong. I invited him on the channel and he blocked me from Twitter. That was another one of those guys who just couldn't, I don't know, couldn't have a conversation with somebody other than himself. So, like I said, until that time when somebody actually takes me up on the invitation, we're just going to remain undefeated in the invitation category on people who want to come in and challenge what it is, and debate, have a good debate, have a healthy debate. I listen to the guy. He doesn't sound like a bad guy, you know. He's just a human freaking being, but to each his own as far as that goes. Very good. I can't wait to be debt free one day. We're renewing the mortgage by 2025. Should be an okay rate. Awesome. Good luck to you. It's a good feeling for sure. Working in the government pension department for 6 years, pension is so great. Yeah, it's a good thing. It only took 20 years for me. Very good. My gym has free charging for my Tesla. Makes me go every 2 days for a charge. That's interesting motivational twist to own a Tesla. I actually like that. That's very cool. Well, good stuff, guys. Very good. I do again think that we made it a success tonight. I do like having the visual, so hopefully I can see what happened on my end. Don't hold a grudge. At least I got back in the saddle tonight. That was pretty cool, right? But anyway, we're gonna wrap down this for 2024. I'll probably go on break and reconvene in the new year. But I just want to say Merry Christmas to everybody, and I hope 2024 was good for you. But I hope each and every one of you actually gets to really start to believe in your own potential, and I hope that can start as early as 2025 for each and every one of you guys, because when it does, it is absolutely real and very, very empowering and quite frankly, liberating. Guys, thank you so much for tuning into the fastest 60 minutes on YouTube. And we will catch you back in the new year. Thanks a lot, guys. We'll catch you next year.